What's up, disciplined investor?
We got Benzinga CEO Jason Raznick here with us.
The man, the myth, the legend, Tom Nash.
Peter Schiff on the Power Hour with us live today. Interesting, different, unique, innovative companies. Mia, you are live with us on the Power Hour. What's up?
Thank you so much for inviting me on.
Jessica Billingsley, that is the CEO of Akerna, the best trade idea resource out there. All right, how is that? The best intro in the world. Let's go. Air horns still don't work. That's all right. We'll get the air horns online at some point. Jay Tower saying, I love the intro. Brian saying, I love the intro. Let's freaking go, guys. We have a fired up hour for you today. I'm electric today. I'm ready to roll. Let's get this like counter up there. So go ahead, smash this one, share this one. Like we talked about, we're trying to bring you video all day, every single day, but we are still a business, so it has to make sense. So share the stream, guys. Subscribe to it. We're going 8 to 4 Eastern. Right now, you are in the Power Hour. This is what I think is the most fun and informative hour of the day that we'll be doing. We do stock picks. We talk about trade ideas. We bring on big guests. And, of course, we take tickers out of the crowd. In a little while here, guys, I'll be dropping a survey to ask you what else we should be doing. But, all right. Starting today off the way that I start every single day, which is to remind you guys what the point of the show is. We want this to be the best trade idea resource out there. We're spending these 60 minutes together every day because we want this to be the best trade idea resource. If we're not delivering on ideas, if you don't leave every single day with new ideas, then call us out in the chat. Let us know because we're failing and we're not helping you to make any money. Right? We want ideas to come from myself. We want ideas to come from Jason. And then most importantly, we want ideas to be flowing from ZingerNation. That's all of you out there in the chat. Today, we have a hot day. We have 2 new stock picks today. I've got one that I'm going to be pitching. Jason has one that he's going to be pitching. That's 2. It's been a while since we've had a double like that. We did buy some other stocks this week. CRTD, that was one from Monday. Stocks up 25% already. Damn. There we go. We got the air horns back. So there's the one. Other tickers that we're going to be talking about today, MSTR, SNDL, NAKD, that's Naked Brands. We're also going to be talking freight and transportation. We're going to be bringing a freight expert on the show. That's not something that we've done before, along with a couple guests in there. And of course, we are going to be giving you guys an update on our chat challenge. That's where ZingerNation, all of you out there in the chat are going head to head every single week to figure out who's the best stock picker? Who should we be listening to? The question this week is, what is the best performing of the stock? What's the best performing stock of the week going to be? We're running it from Tuesday to Friday. Whoever wins, they're getting whatever they want from swag.benzinga.com. Right now, I'm not doing great. So all right, let's dig into it. Cool intro, but no air horns. Sorry. The air horns are non-negotiable. I don't press it nearly as much as I'd like to. But all right, let's start off with something fun, and then we'll click into the live portfolio. Let me get my screen up here. This one is a special courtesy share. Shout out to TJ here, and this is going to segue me into the live portfolio. But let's talk about MicroStrategy. Ticker MSTR. Stocks down today. Zoom in this chart here a little bit. All right, check this out. So here's the 1-year chart on MicroStrategy, right? The thing's gone freaking vertical. The stock is way up because it holds Bitcoin in its corporate treasury, right? Rather than holding US dollars, they own hundreds of millions of dollars worth of Bitcoin. Bitcoin has exploded in price. Thus, MicroStrategy has exploded in price and investor popularity. Here's the question that I have. And I'm going to wait a second after I ask this because I'm curious if anybody knows. But has anybody ever looked at the max chart or a chart going all the way back on this thing? Again, it's MicroStrategy. MSTR is the ticker. Has anybody ever looked at the maximum chart on this stock? You know, All right. At least a few of you have. For all of you who haven't, I hadn't. Check this out. Let's look back to, I think this is 2001 here. No, it's even further back. Yeah, 2001. Okay. 2000, in March of 2000, look at this. MicroStrategy IPO'd, got up to $3,200 a share before coming back down and sitting flat. So I assumed that this stock was at like an all-time high when it got run up with that the Bitcoin buying and Bitcoin exploding. No. Nowhere near. It's up to a third of the all-time high. Totally crazy. Look at this. Mark in the chat saying MicroStrategy, my dad owned it in 2000 from $370 to $5. Yeah, he passed away, but I'm hearing him say, "I told you so." Okay, that's a good story. So all right, that's how we're starting it off with some fun. And I said I'm going to let this segue us over to the live portfolio, guys. We have a problem today. Look at this. The live portfolio. This is my live interactive brokers account. This is we show this thing every single day. All the transactions we make, all the buying and selling, we're doing it more transparently than any other show you will see. We're not just talking heads. If we're pitching stocks, we're actually buying them, we're trading them. But we have a problem today, guys. We're down $1,500 today. Yeah, I know. What the hell? We've been green every day for like a month. I thought that markets only go up. I've been saying that this is the easiest time of trading that we've been having. But no, we're down. I did some digging, right? A lot of these positions, they look pretty good in the portfolio, right? I'm scrolling through. We've got some winners here, trying to figure out what the problem is. And check this out. I'm going to scroll this all the way to the bottom. And this is a little bit of a lesson in waiting and also a little bit of a lesson in how I should be handling this situation. But check this out. The reason why we're getting smoked today is because of this stock, Voyager Digital, VYGR, the Canadian ticker that I own, VYGVF. That's the OTC ticker. The company raised $146 million this morning. I believe that's why the stock is selling off today. But check this out. So whenever I enter a position, I either take a small or medium. I never jump into doing like these massive positions where I'm throwing something 20% of my portfolio. Like I talked about at the top of the show, 70% of what I hold are ETFs, right? I stay very conservative and just have a sound portfolio like that. I got this small position of Voyager, right? The thing is up 2,500% since we bought it a couple months ago on this show. Right. So, for every $100 that we own, and then we're going up 2,500%. So 25x. Right. So, every $100 we bought is now $2,500 of position. It's 25 times what I normally take in a stock. And so that means my portfolio right now is so heavily weighted into one name. And especially this volatile name, right? I mean, any stock that's exploded like this, any stock that's tied to crypto, this is a crypto trading platform, has gone nuts. So I'm super overweighted, right? The stock being down 10% kills me. We looked at the top, we see all this green that we have. We've got some reds that are all flat, but I mean, we've got some green that's like really green today. I mean, look at all these. And because we're so overweighted in one name, it absolutely kills us when the stock has a day where it's down 10%. So part of me is kicking myself, right? Why do I let a position to swell to be that big? The other side of it is, in this market that we're in right now, shit's just been running, right? I mean, I have almost no cash in my account. I mean, look at it. You can see, again, Drew transparent as can be, right? There's not a ton of cash hanging out in there. And there's like the biggest sin you can make in this market right now is just being underinvested. I'm not more than 100% long. Like I know some of you are way out on margin. So if we get cracked, you're going to get freaking cracked. I'm not in that scenario. But again, I've just been letting this position run. And I'm curious. I want to throw this one out to the chat. This is the first question of the day that I'm going to crowdsource. And that's what ZingerNation is all about, guys. We're all about getting the ideas going. Trying to get the creative juices going. So the question that I'm asking is when you guys get stocks that are running like crazy, right? Like you've had a 25x run. Are you trimming these positions right now, or are you just letting them run? If you're trimming the positions, throw me the 1 in the chat. If you're just letting them run, throw me the 2. I have religiously for years, right? It's been about 8-10 years or so almost already that I've been trading. I in the past I'd always been super religious about when a stock is running, when a position is moving, it's up 50%. That's when I start to take stuff off the table. But for these past few months, I it's like every rule that I've had for myself has been costing me money, and I've just been all right. Just buy and let it run. Keep a stop on there, sure. So if you get blown out, you can do that. But I've just been letting it run, and seeing all these numbers come through in the chat. It seems like all right. You guys have been more disciplined than I have. There's a lot of ones in here, which is saying that you're trimming off these positions. Yeah, as soon as I trim, it goes up 50 to 1,000%. Yeah, exactly. I do think that we're a little bit toppy. If we scroll back to the top of this portfolio here, check this out. I do have a couple different strikes of SPY puts in here for that reason, right? I've gotten smoked on them in the February ones down 81%. I got to roll those. In the March ones down 59%. I got to roll those. But I bought a lot of contracts to hedge myself. I hedged away about 70% of the portfolio value. And what I mean when I say that is the notional value of those SPY contracts is represents about 70% of the total portfolio value. Because otherwise, everything else is long. I'm not short a single thing except for SPY. And yeah, Jeremy in there saying, yeah, get your rules and stick to them as you at least get your principal out. That's a note for me. I've got to get more disciplined about this stuff. Because again, I've basically been buying and letting it run. And a question, GC Loop saying, why is VYGR coming as a bio company in Thinkorswim? VYGR is a Canadian ticker. You got to look at the TSX exchange. If you want to trade the US ticker, it does have an OTC ticker. It's VYGVF is that one. So, all right, there's the portfolio. I've got one more position to talk about. But before I do, guys, hit that like, hit that subscribe. That was some mature market thoughts. We haven't had any mature market thoughts yet this week. So there we go. We got into it. We invoked our inner Spencer Israel pre-market prep crew and had a little bit of maturity on this show. But again, we show the live portfolio every single day, right? We're down now $1,800 today. You know, it's not just when we're winners because we're in this thing together. But all right, now let's go back to some immaturity. Let's get back to having some fun. And then I'm going to do my first stock pick, and then Jason's got his coming up. But all right, NAKD. Today is the day, guys. Naked Brands is finally having its day in court. Let's freaking go. Sorry for whoever didn't want to have the air horns, but the Naked having its day. I've been waiting on this one for 2 weeks now. I know that's not long at all, but here's the deal with Naked Brands, guys. The stock exploded in the same time that we were having the GME, the Nokia, the AMC explosion. Naked Brands was a winner in that. I did buy this one. I think my average price is, I don't know. We can do the math on it. Let's see. So we're up 53% on the position. So the average price I think is somewhere around 90 cents or so. The reason why we chose to buy this one was specifically it was because it's a small market cap, right? Let's just be honest, right? If we think that the crowd is running up stocks and can run up stocks, which we know that it can. I saw this one moving. It had, I think, at that time, like a $200 million market cap. It takes a hell of a lot fewer dollars to move a $200 million stock than a $2 billion or a $20 billion stock. Right. So Naked Brands was sort of the pony that I picked. It was one of the ponies. I grabbed a couple of them, but it was one of the ponies I picked. I stayed in it because, again, you don't need a ton of energy in this one to get the thing really clipping. You know, the stock's up 25%. Today is maybe the day. I mean, it's totally a speculative play. I took a small position in it. If the thing gets back up to some of these highs, well, I mean, the thing gets into the twos. We'll be mature about it, right? We just talked about we let Voyager swallow too big of a position and then it F's up the rest of your portfolio. If this thing gets into the twos, it has its stay in court. We'll start to trim it, and otherwise we're just letting it ride. Because again, this is sort of the fun trade. So, and going back, we had a question in the chat asking about the hedging. I talked about some of the SPY puts that I'm in. I don't hedge for an individual day. I always pick 1 to 2 months out. and I'll pick a SPY strike price that's somewhere 5 to 10% below where SPY is currently trading. I'll go ahead and buy puts on them. You know, the ones that I bought maybe 2 or 3 weeks ago, you know, I bought them in the midst of the GME run and all that sort of thing. You know, I thought, okay, there's some chaos here. What really scared me was Elizabeth Warren was just going hammer on TV, right? She was like ready to tear the whole institution down. And that was like my final catalyst of like, all right, I'm loading up on some of these SPY puts. So that's how I go about and do them. All right. I think that it's time for a new stock pick. I'm going to throw this one out there. We've talked about it before, but it's been quite a while. I am, for the first time, making a significant play in 5G. 5G has been talked about for years. I didn't think it was ready. I am officially converted. I like 5G. I'm about to get long 5G, and so I'm making my 5G play, guys. I'm going to tell you what converted me. I recently got a 5G phone. All right, I didn't really understand the case for 5G until I got this phone. And smash the like while I'm doing this pick. Let's get these likes going. Let's get these shares going. But I saw how fast the internet is on this phone. It's insane, right? I get about 150 megabits per second down on my phone. My home internet that I pay $50 a month for delivers me 35 megabits per second down, right? This is part of my phone plan, and it's literally 5 times faster than the home connection that I pay a shit ton of money for, way too much money for. And yes, Detroit does have a good 5G infrastructure, surprisingly. And so when I saw the power of 5G flowing through this phone, it made me realize that the way that we consume internet at our homes should change. Right now, the process is, I've got Comcast at my house, right? They physically have dug a line into my house, right? Run it through the house so it can be plugged into a modem and distribute 5G throughout the house. And again, the internet that I'm paying for is slower than what I'm pulling down on 5G. They say that I have the fastest plan, that I buy the fastest plan that they have available. I don't know that that's the case, but I called. I tried to give them more money for faster internet. They wouldn't take it. So I'm assuming that's right. And so the stock that I'm picking is Inseego, ticker INSG. That's India, November, Sandy, Golf. It's a stock that I've owned for about a year or so in my IRA, maybe 2 years. I mean, it's been a while. And this is not a pick that I'm trying to swing trade or anything along those lines. I mean, this might be a position that I hold on to for the next 5 years. But let me tell you a little bit about what the company does. They make modems and routers that sit in your house. They pull the 5G connection into your home and into the modem, then pass it to the router, which then distributes it as Wi-Fi signal throughout the rest of the house. So basically, this really annoying, laborious process that we have of, hey, you want to have internet to your house, you got to dig up a cord, something along those lines. They go ahead and they replace that by providing everything wireless. It takes the 5G signal, distributes it through your house. Why can't your phone do that? When I try to tether, I'm super limited by the tethering power of the phone. Right, I get 150 down on the phone. I try to tether that onto my computer. Only got 3 megabits passed from the phone to the computer. Inseego solved that problem with their router modem combo. Right, they allow you to pass super fast internet throughout the house. The company has deals with Verizon, AT&T, Vodafone, and about a dozen other carriers to sell their products. Sales growth has been okay, but not great. Sales are up 45% year over year. Yes, that's a ton of growth for a public company, but it's not a big stock. Margins are bad. That's another thing you have going against it. And then you got Sierra Wireless and Huawei are major competitors. So those are big competitors. So those are your negatives. I'm going to cut through them, and I'm going to say that when 5G infrastructure becomes more prominent and gets more widely adopted by consumers, this is going to be the future of home internet. Is it's going to be 5G straight to your house, broadcast as Wi-Fi to your devices. They solve that problem. Huawei has a major roadblock with some of the regulations that the U.S. has put on it. Sierra Wireless is really the main competitor because they also have deals with a lot of carriers. But Inseego, it's a small stock. That's when I'm picking it. I like it. Again, I've owned it for a number of years in the IRA. Now getting into it in a bigger way because I understand the power of 5G. And there's my pitch. If you guys like that one, throw me the one in the chat. You don't like that play, throw me the 2 INSG. That is my stock. Let's go.
Luke, I'm glad we got the right symbol up now. They had the wrong symbol up for a minute.
I did, or what was wrong with it?
That someone put ISIG, and I was like, what the heck?
ISI. Wait, is that a stock? That could be a sign. I'm all about looking for signs. ISIG. Okay, Insignia Systems down 10% today. It's got, let's see, $14 million market cap. So I might just buy that one too.
Look, you're missing all the comments. Like Jim Lee bought ISIG, he made $2. Then above, someone says it's only a 14 million market cap. I came in the show late because all right, we have a big guest, Craig Fuller, Freightwaves. Very excited. We'll be on a second. So he put the wrong symbol in, and I'm like, what is going on? I own INSG. I've owned INSG since $8. And I was like, who would have put the wrong symbol on ISG? It's an easy one, Inseego. And I looked, and I got down to the bottom of it. It was your best friend, Aaron Bree. Okay. All right. So, Luke, we have a guest, and then we have to talk about SNDL because there's a lot of people.
Our boys did it. They said $2 and the stock was at 40 cents. They cracked it.
They have, you guys,
they did it.
Editors, if you're listening to the show right now, will you go to last week or the week before on SNDL? I don't even know. I want to pull the chat screenshots because people at 40 cents were telling me I was insane if I was a boomer.
Yes.
I didn't buy SNDL.
Shout out to Atlas. This was an Atlas stock. Yes. They said this thing is going to $2. It was like a deliberate march. It just climbed every day and it got there. I mean, they nailed it.
Should I share my screen and show how bad I did this? Can I just tell you the truth now?
Yeah, tell
right
me
now.
You 230. Oh my god.
You guys ready to? You guys ready? I know a lot of you guys like my invest trades in the stocks. I know you guys buy what I tell you typically or what I buy, but on SNDL, this is one word of Jason. I'm saying third person Jason because I was bad. Ready?
Yeah, I'm gonna put this chart up too while you're doing that.
All right, I bought SNDL on 128 at 118. I sold SNDL at 83 cents on 129. Okay.
Oh shit.
I'm not done. I bought SNDL on 2.5 because they keep yelling at me in the thing. I bought a lot of it at 115. A lot, relatively, actually not a lot. A medium, small to mid, and then I sold on 2.8, 1/4 of the position for 113, and then on 2.9 yesterday I sold 1/3, like a little bit less than a quarter, and so I still have 50% of the position left, which is good. So I'm up a lot on that. If I would have just bought those, say 20,000 shares up a point, that'd be nice money. But this SNDL scared me. People that don't know the markets kept bringing it up to me, like outside of Benzinga. And when this one guy brought it up to me recently, I I met in our building. He was in our building and he's like, SNDL. And so I'm like, it freaked me out. So I sold it. If that didn't happen, I wouldn't have sold. But when he brought it up to me,
crew, man, they got a lot of followers.
Brian Penny, I know Jason Spatafor. He'll come on. I know him, but we can bring him on if he wants.
And that's basically my case with Naked Brands NAKD, right? It's not a developed investment thesis by any means. It's just like another one of those stocks that's making the rounds right now. It's a small market cap. I'm like, all right, today's the day. We're doing it.
All right, Luke, we have an awesome guest.
Hell yes, we do.
So this guy's the man, the myth, the legend, built this company from scratch. He's an entrepreneur, a doer, big ass business. Craig Fuller from Freightwaves. Welcome to the Power Hour. You got the drums, Luke? There you go.
Boom. There we go.
What up,
That's an
Craig?
introduction, guys. How are you?
Good. How are you?
I'm great. Excited to be here.
Are you in Chicago right now?
No, Chattanooga, Tennessee.
Oh, yeah. Oh, that's right. That's where you are. That's right.
So we're in the South. You guys are Detroit, right?
Yeah, it's so warm here.
No, all right. Let's do the temperature check. We're at. I checked this morning. It was 11 degrees out. I bet you're not a ton better right now. I'm sure it's better. Okay, that's 57. A ton better. All right, all right.
Blue skies here. So
okay. Well, we had a guy in our news team. He said that all 50 U.S. states are going to be below freezing at some point in the next 24 hours. So I figured everybody's cold, but 57 is pretty good. I would trade you for that one.
They are calling for much colder weather the rest of the week. So. Big snowstorm. We have a full-time meteorologist that tracks this stuff. So, because truck drivers, and folks that are in our industry are impacted by weather.
So let's talk about the business a little bit to give our audience an introduction. My understanding is, and the way that I always think about Freightways is it's the place for freight news and data, right? Transporting goods. It is the place to go for news and data. But Craig, I'm sure you can do a more elegant explanation than that.
Yeah, so we're the Benzinga of the industrial economy. So the best way to think of it is we have a media business which provides context and information to folks that are in the logistics industry or are using logistics services, which is really the industrial side of the economy, as well as a very large data business, which provides really fast and fundamental data, what's happening in the physical economy. So if you look at back in COVID, we actually were making some predictions in early April or mid-April that there was going to be an aggressive V-shaped recovery. People thought we were nuts, but that's proven correct based on the sort of industrial volumes that's moved through the broader economy.
Okay, there we go. And I want to dig in what you're saying about, how COVID impacted, transportation of goods and where we are at now. Because it's a space that I don't really know about. And so I imagine that a lot of our viewers don't really know about that space.
Yeah, so the COVID impact, if you think of what logistics does, is it keeps the economy. It's the liquidity of the physical economy. So if you're ordering products that you buy really anywhere or are using products that are not digital in nature or services in nature, those have to be shipped somewhere. So 40% of the global economy is what we call logistics dependent industries, which is effectively if you didn't have logistics operations, those businesses would go out of, would no longer exist. We would all die because we don't live, well, most people would die. There's some people in East Tennessee that would probably be all right to live on the land down here.
They can go hunt and gather, and yeah, there you go.
But modern society is dependent upon logistics operators. And so our audience, the folks that are tuned into our data and our news, are concerned about the developments and how all of these factors, whether it's weather we talked about just a second ago, to COVID, to geopolitical events, to just the economy, how that's going to impact their business. And since most freight transactions are routed within 2 days, within 48 hours, the dynamics of the market.
What do you mean by routed within 48 hours? I don't even know.
Well, most routing decisions, companies, I think this is sort of not well understood, is that most companies, when they are shipping goods, ship them, they prepare the items that they're ready to ship, and they ship them once those orders are fulfilled or once those products are manufactured. They often don't make plans weeks or months in advance on how they're going to ship these items. Now, they may have preferred vendors that they work with and primary carriers, but the actual execution of that shipment, those orders are placed within a couple of days. And so because of the volatile nature of the capacity, the fact that providers are constantly trying to optimize their fleets, that your primary provider may not be available. Now, folks that are using UPS and FedEx wouldn't understand this because we call UPS and FedEx and they show up. But in the vast majority of freight transactions, it's not small parcel, it's big trucks. And those big trucks are meant to be filled. And most companies don't own their own trucks. So they're buying that capacity on demand. It's like going to Uber.
Okay.
Every single time that you need to ship something, you're doing it on an on-demand basis.
Okay. And so, as I'm thinking of consumers in the U.S., as they're purchasing more goods online due to COVID, I know that has an impact on the small parcel business. I would imagine that flows upstream to these bigger, freight movements that you're talking about. Is that fair?
Even more so. So UPS and FedEx have had blowout earnings, DHL as well internationally. You've seen it in their stocks. I think FedEx has just been, and UPS alike, have been on a tear for the last year. It has also driven a lot of activity and investment in the public railroads, the public truckload stocks, and LTL providers. And so the entire sector has actually been seeing a lot more demand than they've historically seen. This is a record amount of volume that's driven higher rates. It's also caused a lot of strain on the supply chain. If you're ordering products, so my wife and I are doing it in addition to our house. And so we have things like windows and tile and all these items, miscellaneous items that we have to order for our house, those things are being delayed by sometimes months. So, we're having to wait 4 to 5 months for this stuff to get into the country because of the fact that the supply chain, the capacity of the ships, the capacity of the trucks, and all of the upstream materials that it takes to assemble those goods are quite constrained. I think the more public, a lot of folks that are trading stocks probably understand there's been a lot of discussion about semiconductor shortages in the auto sector, as companies like General Motors have come out and said they're not going to have as many, they're not going to be able to produce as many cars because they don't have the semiconductors. That's happening not just in the semiconductor industry, but across all major sectors of the global economy. And because of that, it's putting an enormous amount of strain on these businesses. But what it's actually doing is it's forcing companies to add additional time for consumers. It means products are going to be a little bit slower to get to them, and they're likely to have to pay higher prices to ship those goods. Now, they may not, if you're ordering on Amazon or an e-commerce company that pays for shipping, you probably won't notice the additional cost increase in the shipping expenses. You'll probably see it in the price of goods. We'll start to see some inflation, if not already.
Okay. And so as the economy tries to work out these pains, these sticking points and reduce these delay times, where specifically like are the infrastructure fixes or the supply chain fixes going to happen? Because I'm thinking about it from an investor hat of, okay, there's a problem. Somebody's going to solve this problem, and whoever solves it is going to be rewarded financially. So like where specifically should we be looking?
Well, it's being addressed by all of the individual transportation providers are benefiting, frankly, from this massive surge of demand. And demand has an exponential impact on the financial performance of these companies for two reasons. One is when demand accelerates, freight, think of these as moving warehouses for trucks. And basically, if you think of if you owned a warehouse, what you want is high demand, which drives prices up higher. If that real estate market increases, the ability to charge more also increases. This is exactly the way the freight market works, but rather than waiting cycles that can be measured in years or decades, we're talking about cycles that are measured in days or weeks. And so what's happening is that accelerated demand is increasing the amount of volume they put into their networks, as well as higher rates they put into their goods. They're able to charge more. So companies that are in transportation, the transportation providers, are a really great way to be involved in this market because they have a lot of direct exposure to the outcomes. Companies that are buying logistics services are having to pay those additional costs. Now, it doesn't seem, take Amazon as a great example, because it's also increased. They have some benefits because they're able to buy capacity and absorb those shocks. What's happening is there's the winners and the losers. The larger companies, the larger big box retailers, the companies that are really exposed to e-commerce are in a much better position to be able to handle these inefficiencies in the networks than very small and medium-sized businesses that don't have sophisticated logistics networks. Amazon and Walmart and Target can take a lot more market share than the small retailers can because they just don't have the sophistication or the money to go spend on freight networks.
Okay.
Another great play is the warehousing operators, and so they're also a good. Those REITs that are invested that are in the sector are also good. One of our investors, in full disclosure, is Prologis Ventures, Prologis Ventures, which is a part of Prologis, which is a REIT, has done exceptionally well. And what's nice about their particular business is it's an industrial REIT, it's a real estate REIT, but it also benefits from the growth of e-commerce. I think most people think of warehouses sort of boring boxes, but it's a part of that overall supply chain. And as companies like Amazon and its competitors want to get products closer to the point of consumption, and as people move outside of cities, what that's requiring is these retailers and e-commerce companies to build more inventory in warehouses so that they can get those items to you when you need them.
All right. I like that one. There we go. It's officially on the notepad.
PLD, I think, is the ticker. They are an investor in Freightways and Disclosure. I unfortunately don't own. I don't think, maybe in some type of fund I have, but I don't have direct exposure to Prologis. I wish I had bought it when it was $50 a share during the collapse in March. But it's a really good play. And what's nice about that is it's a sector specific play. You're betting on the growth of e-commerce. And if you think about e-commerce represents something like 16 to 18% of all retail sales, it's still a growth industry and is going to continue to be a growth industry.
Yeah.
I like Prologis.
But that one, I think it's interesting too.
Yep.
It's a great play. I mean, obviously the UPSs and FedExes are a good place to be positioned. The railroads are always in a great position, benefiting from just freight demand. If you believe that GDP is going to increase, particularly in the industrial side of the economy, and let's just keep in mind that the industrials have actually been slower to sort of rebound in a COVID world than what the broader economy has been, or the retail economy. As the industrials do well, so will the railroads. Because they benefit from a lot of the gross industrial demand. And if you think about what's being talked about in this new congressional bill, particularly under the Biden administration, there's a lot of openness for infrastructure investment that will benefit the railroads directly, because once you have massive amounts of infrastructure, you're going to be moving things around like steel and concrete and other types of big industrial items, which really benefit the railroads.
Okay.
Yeah.
So go ahead, Jason.
No, it's just like the truck and shipping, all this stuff is such a growth industry right now because so much stuff is being shipped. So, I mean, stores can't even get the inventory they need right now. I mean, it's crazy. And, the Prologis and these trucking companies and I don't even know, like the Echo Logistics, all these different ones, they're all playing in this game in a huge growth industry right now. Huge.
Yeah, C.H. Robinson is always they're the leader in freight brokerage. Their stock has been under pressure over the last couple of years. It's now sort of rebounded. But the reason it's been under pressure is there's been this view that their business was being disintermediated by the digital venture-backed startups. That has not played out. They have had some pressure on margins, but they've also gained a substantial amount of market share. And I think in an industry, in an economy where companies are having to place logistics as if not their most important, a top 3 agenda on how they operate their businesses, and that's going just to continue to increase. It's now table stakes. You must have a logistics operation. Companies like C.H. Robinson and folks that run these managed logistics networks will be in high demand.
Yeah, and so C.H. Robinson is sun up, but they're needed. They're not being disintermediated. Like I know Uber Freight was something that people were afraid of. Is that a big thing right now, Uber Freight?
It's a discussion, but C.H. Robinson, betting on C.H. Robinson, it's a company that for the last 20 years, people have been predicting that it would be disintermediated by first the internet, disintermediated by these digital upstarts, and now people like Uber Freight. It's not happened. It's unlikely to happen. C.H. Robinson met with a CEO of a very large competitor of C.H. Robinson, and they shared a story with me is they can go into any shipper in North America, anywhere, and C.H. Robinson is always there. And this is a large competitor to C.H. Robinson. And this CEO was talking about how much they hold them in esteem, how much they respect the brand, even though they compete with them. C.H. Robinson is not going anywhere. It is a strong, strong brand. There will be margin compression, but they will also gain additional market share.
Got it. So that's the other. See, Craig Fuller, we got stock trades, and you guys should check out freightways.com. You see a lot of these companies presenting, if you want to know about logistics, trucking, you should go to freightways.com. Yeah. They have shows. They got it all. So
if you like Benzinga, you like Freightways. Yeah, exactly.
Yeah, they're very similar. I think there's a lot of similarities between the business models, and we put out a lot of content. You guys put a lot of content out there. We provide a lot of context with a little bit of an edge. You guys do as well. It's logistics is a really hot sector. We've seen the EV sector, the electric vehicle sector, all of that is impacting the future of logistics. And in fact, most of those companies that have gone public in the EV sector are talking about commercial products in the commercial sector, where that's impacting and benefiting the freight sector. So those companies will be benefiting from that. I think some of the exciting technologies, if you're interested in where the future of our economy is headed, companies that are in the logistics sector are helping write that story right now. Things like drones and drone deliveries. This stuff is pretty fascinating. It's all taking place.
Yeah, the drone deliveries. I heard like in remote hospitals, they're using drone deliveries for.
They're doing it, in places like Alaska. They're actually doing drone deliveries to some, they used to fly small aircraft in there and have bush pilots. Now they're implementing drones. There's a company, a startup that just raised capital that's doing airdrops. So there's not even a drone. They basically parachute into places like remote islands in Hawaii or remote islands in the Caribbean. They don't even have to land. They just parachute down, and then effectively the parachute has its own motor where it can guide into its destination. It's just a lot of stuff happening. If we think of what happened in the internet 20 years ago, what happened with cell phones in the last 10 years, the smartphone, the next decade is going to be the mobility revolution. And you think of what's happening with city centers, where people are now leaving city centers and moving into suburban areas and rural areas. That's all going to drive investment in logistics operations and in technology, because regardless of where you live, you still want the benefit from being able to consume goods, and you want them right now. You don't want to wait. And that also means larger amounts of inventory. The other thing that's sort of playing out in this is e-commerce means more inventory, not less, because of the fact that consumers want to consume right now. They don't want to wait. It means that companies actually must hold a lot more inventory closer to the consumer, whereas in the old days, it was a lot of JIT, which was they would only produce the items when they were ordered. Now they're having to plan these much more sophisticated networks to put inventory around their operations.
Got it. Yeah, just in time. I remember taking an operations class at Michigan, and they're making the pizza, the assembly thing, operations management. I hated that class. So now
I didn't like it either. I didn't do very well in that, so I ended up talking about it. Those that can't teach, I guess.
Yeah. Diane Rue, and she's like, I want to do extra credit how they can increase the velocity of some restaurant, and I'm like, no thanks. And that was my OM class. Yeah, I hated it. So, but I get it now. It's not just in time; it's having more inventory. I mean, I get amazed when I order stuff and then it's there like 8 hours later or the next day. I mean, it's amazing.
And they're trying to accelerate that. I mean, Amazon, the Amazonization and the Uberization, the Instacart, all of that is meaning you want it right now, and that's forcing companies to add more warehouse space. You think about it. Prologis has a stat, and I believe it's around 40% increase in terms of the equivalent amount of demand. If it was retail versus e-commerce, if it's e-commerce, it increases. They have to hold 40% more inventory in their networks if it's an e-commerce driven activity than if it's just brick and mortar. Wow. And so what's really taking place now is this requirement to build out these micro fulfillment centers so that they can get items closer to the consumer where they're going to be consumed.
Got it. Okay.
It's a fascinating time.
I know.
This is awesome. We got so much positive feedback in the chat. Like it's a space that I was super interested in because I didn't know that much about it. I was curious how the viewers react. Everybody loves this. Like this is like the backbone of the economy. And I think you opened a lot of eyes in like 15 short minutes.
Well, it's not a niche. I mean, it's $9.6 trillion of the global economy. It's 12% of GDP. I mean, more people are in work and in logistics in the United States than any other industry. I should say it's the number one employer in 29 states. Sorry, go ahead.
Wow. 9.6 trillion, Craig. Luke has in his bank account, so it's a niche to him.
Yeah.
He bought some GameStop. So
bought some GameStop, Bitcoin, whatever.
Yep. No, but someone in the chat, Craig, just to finish up, Jim Lee, a friend, he wrote, this is your shovel play. So in the gold rush, this is your, selling the shovels, selling the jeans.
That's right. These guys that are doing the work are the ones delivering, keeping our economy running, and should do well as there is expansion. But there is a direct correlation to GDP and logistics demand. So any of those companies, I like companies that don't have a lot of direct competitors. The railroads are really well positioned; they're effectively a monopoly, and the warehouse operators, because you can't move the warehouses. So the warehouses stay; they're in a really good position.
Got it. Okay. All right. Well, Craig, thanks for coming on, talking logistics, trucking, the shovels of the gold rush. I mean, this is where it happens. This is how stuff gets to your house. And check out FreightWaves if you haven't yet. Come on again, Craig. You're the man. You built a big company, a lot of money raised. I know we'll see you in the news going public soon, so we'll be watching. All right, man.
We'll come on. We're ready. See you guys.
All right.
Take care.
All right. Thanks. Talk to you shit. Thanks.
All right.
Bye-bye.
Thanks, Craig.
Right.
That was awesome.
That
was awesome.
Yep, he knows his shit for sure. And
I love how he's so good at tying it back to the market too. You know, to appeal to this audience. I got 3 ideas out of there that are on the notepad now.
Okay, Luke, I can't take it, Luke. I don't know what to do. I don't know what to do. All right, Luke, I can't.
I would quit if I were you.
I may quit. Benzinga today, guys. That's it. I can't take it anymore.
Yeah.
No, it's not good for my heart. It's not good for my stress.
That's fine. You always told me, you have nothing if you don't have your health. If it's bad for your heart, I think close the stream. Give me the keys on the way out. We'll switch the locks tonight. We call it a day.
Yeah, I can't.
I'm ready.
Austin,
put me in.
Austin Henning said everything's going fine. No, it's not. Guys, everyone scroll up to VA's comment.
VA.
Yeah, take a gander. Look at VA's comment.
I can't read that one out loud.
Yes, you can.
Read
it out loud.
It's gonna be painful. All right, hold on.
Read it out loud so people know what you're saying. They might be listening. You gotta read it. Your soundboard's not loud enough.
FYI, Jason, Twitter link from YouTube page does not work. YouTube 2 words.
I got it.
So now go to it. Luke,
go to our Twitter.
No, go to our YouTube.
All right.
Click on my name.
Oh, hold on. Let me get the screen share. We'll make this dramatic. We'll get another dun. All right. Twitter.com/Jason Raznick. Click. Page does not exist. Oh, maybe you just got taken off of Twitter.
No, they have 2 little things next to my name in the thing. Like, if you click my name, it has like 2 random characters.
Oh, mine doesn't work either.
Yours doesn't work either?
No.
Oh my fucking God.
Wait, if the Benzinga Pro,
Yes.
See, the Twitter links, whatever, I can get past that. Right, I'm the revenue guy. If the Benzinga Pro link doesn't work, then I'll quit.
If we both quit, Luke, then we're gonna have to hire internet
all right, yeah, that's fine.
to take over.
All right, we've got the Benzinga Pro link. That then I'm fine. I can stick it out for another day. You're done, but I can stick it out for at least another day.
Wait, Eddie Edwards, I don't understand. Get me a winning deal so I can send you to Jamaica for some fun in the sun. No stress except when you create for yourself. Give you a winning deal. Have I not given you a winning deal? Okay, Luke, can I just give you an update? Can I give you an update?
We've got 2 this week that are big winners. Naked, CRTD.
Hold on. Okay, CRTD. But I told people I bought a stock a couple of days ago. BTN. I say you don't need to buy right now. What's it up today? 7%.
Shit.
Luke, I told you.
You told me.
It's a Brian stock. Whenever you have a Brian stock, you just buy and you look away. You say, if you see me walking by and the tears are in my eyes, you look away. Baby, look away. When Brian gives you a stock, you look away. Baby, look away. Okay? And I bought a large position, I would say.
Do it.
I mean, it's up $4,000. Come on, let's go. Let's go.
There we go. Hold on. Hitting the cash register.
Wait, Nita. See, we need to have a thing where Nita could show that she was in with me. So Nita, we have the site benzinga.com/trade ideas or trade dash ideas. We need to have a way that you could say like thumbs up. I bought it with you, Jace. Okay, look at this. Hold on. If you bought BTN with me yesterday, and be honest, don't lie, be honest, because whatever. If you bought BTN with me yesterday, I'm not going to say press 1 because that's just too easy to cheat. Will you press 10? 10. That'll be a harder one. It's 2 numbers. If you bought BTN with me yesterday, I didn't say buy it yesterday. I just said I bought it. I didn't, I don't. So Janet Lowe bought and sold things. Well, that was probably a bad sell, Janet, in my opinion.
Okay, so that's what I wanted to clarify, guys. So and maybe it's on you, Jason, for not clarifying. When Brian's background is at a deep value hedge fund, right, where they're like basically buying businesses. He's not getting into a stock because it's a 7% move. He's getting into a stock because it's a 50%, 100%, 300%.
All right, Luke.
Especially a name this small.
Luke, I'm like a hedge fund guy, right, Luke?
Nope.
Well, now you do. Okay.
Okay. Now I know.
All right. So we
learned two things in about 3 minutes. We learned that you're a hedge fund guy and that today's your last day at Benzinga.
Yeah. With my name, my thing not working and no one notices it at our company, I can't take it anymore. So I can't take it. But let me just go. Let me show you something. Okay. And don't share this with all your friends, Luke. Like I just had to show you something. Okay.
All right. Show me.
Just give me a sec.
And I got a couple stocks to argue with you about today too.
You're gonna lose everything. Here we go. Sharing my screen. Where is my software? We built our own video software. Isn't that cool, guys? We built our own video software. All right.
Is that why the sound doesn't work?
That's why the sound sometimes doesn't work. Someone's talking loud behind me. Who is behind me? I don't know. There's some guy talking about something about Lycos. Lycos, the surgeon, is not around anymore, sir. Whoever's talking behind me. Okay, I'm going to share my screen. I don't know what he's talking about. He's talking about Lycos. Do you guys remember Lycos and InfoSeek? The guy behind me, I guess, still uses InfoSeek or Lycos. All right.
I remember that.
You weren't born.
In 93.
You weren't 93. You're born.
Mm-hmm.
All right. Here we go. Here's my BTN model. So I have a comp analysis. Here's BTN. Here's price target on numbers and what's the default. Here is when we 237. Here's dilution, shares offering, trailing 12 months revenue. Then I do a comp analysis on lumber and this and put a number in and do a whole analysis here. Look at this. Current price, implied price, 280 USD, everything. I go deep, man, Luke. I go deep on BTN. Okay?
Surprise, motherfucker.
That's how I feel.
Luke. That's exactly. So in your face, big disgrace. Boom, boom, bada, boom, bada, bada, boom, boom, boom. That's
BTN.
It.
All right.
No, I'm not saying go buy it though.
I know. You're saying that Brian bought it, and it's an interesting thing to look at.
But Leonard Dorr, that's not nice, man. That's not nice. Please be nice to Vivi. So Vivi gave KMPH. I'm up so much on that. NSPR, I'm not up as much. I didn't buy much. But he said I shouldn't buy Vivi a drink. He said butt her a drink. I don't know. Why would I give her a butt her a drink? That's not nice, man.
Yeah, not about that.
And Jim Lee, I don't have time to do those models. I don't have it. So what I did is crowdsource it. So I built this really large crowdsource network, and I say I need help on doing some numbers and modeling, and plugs and numbers. And well, yeah, you got to also look at lumber prices. You got to look at the trade. You got to look at interactivity advertising. I mean, it doesn't mean, by the way, guys, it doesn't mean that it's going to do what you think it's going to do. You have to understand. I was buying Tesla for years before it moved. I was short Washington Mutual and Contra before they went down. So timing, Mr. Market isn't perfect timing. When Smile Direct was at $4, I was buying the stock and I was telling everyone to buy it, but most people didn't. And now it's at 14. And the markets, Mr. Market doesn't necessarily listen to you. It just doesn't listen to you. You got to accept that. Now, you guys in this show, we've had a lot of, good fortune in the immediate moves, but it could change. And the thing that you guys need to be doing more often is talking about your trades you're making, talking in here, not even talking to Luke and I. Like you guys got to sit here and talk with the trades you're making. PJ Williams just gave a 1999 sticker. PJ Williams, if you want to, I'll give him a stock pick one day that's not even anywhere on this screen. So
there we go.
Yeah, I'll give PJ Williams a private stock pick because I have them. I mean, look at my AX. I think I'm interviewing the CEO of AXON next week for the Raz report.
It's an interesting one. Exxon.
I'm up 583% on the call options.
Whew. Wait, hold on. There we go.
Okay. Yes, Raz, the new call, Kathy Wood. Yeah, I basically am. That's right. Okay. Now, why are they talking about so much about this stock? Hold on.
Which one? Which one?
I
We
don't
do,
wanna
we do
say
have
it.
a guest to bring on in a little
Why does your
bit.
mic go? Why does your mic go up and then lower? What are you doing? Are you putting it close to your mouth? What are you doing?
Me? My mic
No.
goes in and out?
Your sister? No, it doesn't go in and out.
Okay.
It just
I move a little bit, you know. I like to dance, you know. I'm a very active guy. I'm a high energy sometimes, you know. I can't sit still.
Look,
Maybe they'll give me medicine for that.
if anyone pisses me off in the chat, I put him on a 5-minute hiatus.
Who did
I love
it?
This guy wrote, "What are you doing? Give me something." I'll give you something. Get the heck out of here. That's what I'll give you. I don't need
Boom.
this shit.
Knuckle sandwich is what that
yeah.
sounded like.
I don't give me something.
I'll
I've
give
given
you a
enough
bad
things.
attitude.
Go to benzinga.com/trade-ideas and go read my last 15 picks for you, buddy. Don't come back in here either. Sir Cusano,
Boom.
Tom Cusano. So if you guys want to look him up on LinkedIn and say, kill people with kindness, not meanness, feel free. It's SIRACUSANO. Very mean to me. Very mean. I don't know. I try to be such a gentleman.
All right, and
Very-
if anybody's watching SNDL today, guys, it's right at that high of day.
Okay, so what should we do? So put the chart on. Let's look. So I own SNDL. I'll tell you how many shares I have left, Luke, because I sold some. But I have, let's see, real quick. You said there's a guest. I can't keep talking about that kind of stuff. I got to stop.
All right, let's talk about this one for a second, though. So you're saying,
Okay,
what should you do with this one?
guest.
You're in it now. My opinion is if we break out above the highs, there's probably room to run. If we get rejected from them, you know, maybe it's time to walk away.
Okay, and then the most ridiculous thing, Luke, I got to say one other thing is,
Yep,
we have this site, swag.benzinga.com. Supposedly, they ordered stuff for me to wear like a month ago, but it isn't here. Honestly, my 11-year-old daughter, could have walked it here faster than wherever supposedly we ordered it from. So I don't know if it's a true story that we ordered it, but I just think it's made up. But here you go. What are tendies? I don't even know.
Jesus. Luke? A little boomer of you. Tendies is like a slang term for profits. You know, it evolved from 4chan. It evolved from an epic 4chan tale. All right, we won't go through.
I don't care. I don't care. I would rather hear Jesse talk. I don't want to hear about this stupid
then let's
shit.
bring Jesse on. One day we'll do the history of tendies, though. I'm well versed in that.
Well, the day you do the history of tendies to tell me, let me make sure that I'm out that day. Okay.
Okay. Deal.
Okay. Yep.
The next day you come on, I'll be out too. Okay.
Okay. And then the next day.
All right. Jesse's on with us. Jesse, thanks for hanging out. What's up, man? Welcome to the Power Hour. We are happy to have you here.
Hey, thanks for inviting me on.
Absolutely. And we've been doing a temperature check with everybody that we've been bringing onto the show.
Wait, I don't see your device. Are you taking their forehead temperature? Make sure he doesn't have corona right now because you don't want to get corona. Is that what you're doing?
All right, that was a good one. I'll cash register that one. All right, we want to know the temperature, the outdoor temperature of wherever in the world that you are. We're in Detroit, Michigan, and it's 10 degrees for us. So we're still in the double digits. But we might get rejected off of those highs later today.
I'm here in Bend, Oregon, and we're expecting we got like a winter storm alert going. Snow should be coming any day. We're like 40 degrees probably right now.
Okay, that's pretty good. Everybody we've had on so far has been warmer than us, so we're a little jealous. Maybe we need to relocate. Jason said today might be his last day at Benzinga. I don't know. If so, then I guess I'll pick.
For my health, it probably should be my last day at Benzinga. I can't take these things anymore. My stress is, I don't know. I just have to go to be in like a secluded place. I don't know, guys. So Jesse, tell us about life. Tell us about finance. Tell us, you have years of experience. Tell us what we're doing wrong. Tell us what we can do better.
Well, I got to agree with you about the seclusion. That's why I moved to Bend 20 years ago. It's small town. I'm in my home office here. The isolation has been a little rough with the COVID and stuff, but it's given me a lot of time to focus on markets. I honestly don't know how you do it with the doing a live stream like this and have all the people kind of pinging you for trade ideas and stuff. That would drive me nuts. I wouldn't be able to do that for more than 5-10 minutes before I'd have to give in. But interesting stuff going on in the markets here. I mean, you guys were looking at some cannabis names. I've owned
Yeah.
one of those that I bought, over the past couple of years, was kind of just building a stake. I looked at it as a lottery ticket. AMRS is the ticker. It was John Doerr. I noticed it because I think John Doerr bought a bunch of stock. He's on the board, over the past couple of years, and stock's been a 10 bagger since March or something of last year. So for me, I'm taking money off the table on these things. It's just when you make that kind of money in such a short period of time, you got to at least take your profits or your cost out of it, in my view. And to me, a lot of this, the way I see the market generally right now, a lot of these names are moving because of a broader speculative mania that's just, driving penny stocks and SPACs and everything you want to think about to the moon right now. And to me, I'm, focusing more on probably trying to put in some feelers on the short side. I'm not, going to stand in the way of a strong momentum. If they don't work pretty quickly, I'm going to take them off. But to me, it's time to start looking for reversal. And then kind of the reversal we saw this morning was pretty kind of encouraging to me in that regard.
Encouraging that you think that there's going to be more reversals, more short, more.
Yeah, the shorts could start working. That to me, I'm watching Tesla and Bitcoin as kind of measures of risk appetite, and those two stocks to me are pointing today, or suggesting today that risk appetite could be in the process of reversing.
Interesting. Interesting. So, I mean, I've been a long time Tesla owner, and I have been trimming my Tesla since 890, and I sold probably my biggest thing of Tesla yesterday at or maybe the day before at 851, but I still own a lot of it. It's like I don't balance, like when it gets to a big position I don't sell, but I now have, because I agree with you. I think the opportunities may be changing in the market, but can we go back a little bit, because you were at Bear Stearns, right? And then you left there, and maybe you started a hedge fund a few years later. Is that right, or do I have that right? Or no?
Yeah, I was in Bear Stearns in the mid 90s, and I left with my partner at Bear, my boss at Bear, to co-found a hedge fund in 97. And I was the head trader, co-portfolio manager of that fund until March of 2000, which is when I quit that fund and moved here to Bend, and essentially been just kind of managing my own money since then.
So are you out there raising money then for the fund, or is it just your own money, you're saying?
No, it's just I don't have a fund or anything today. I started writing about the markets. Really, I started writing about real estate in 2005. I had to start a blog, watching what the real estate market here in Bend was doing. And that kind of evolved into writing about markets and stuff over the past 10 plus years. So.
And you still do it?
Yeah.
What's the blog name?
TheFelderReport.com.
FelderReport.com.
There we go.
Okay, put it up.
Appreciate Aaron. Get that in the chat, please.
Yep.
And Jesse, I want to hop back to a little bit ago. You said you were looking for some places to potentially put some shorts on. I'm curious where in the market you're looking, and like what type of names you would think of throwing those positions onto.
Well, the stocks that I've been watching individually have been mainly the ones that have benefited most from the pandemic. You look at there's a lot of names that are just obvious beneficiaries: Netflix, Zoom, Peloton, that, because of lockdowns and things like that and social distancing, their businesses boomed bigger than they otherwise would. With the reopening of the economy, and actually, once we get all vaccinated and the economy, booms again, I think a lot of those companies pulled forward a lot of demand from the future, and there could be kind of a vacuum for sales for those types of companies for a period of time where they disappoint. And so, this kind of reopening trade is been an important one for me. Back in the fall, I was, about as pounding the table bullish as I've ever been on the energy sector. And traditional energy, and I'm talking about mostly the oil and gas exploration production companies. to me, I think, with Paul Tudor Jones came out and said, we're going to have a boom in the economy like we haven't seen in a long, long time. And we haven't, we're just not producing enough oil to meet the demand when people start flying again and driving and all this kind of stuff. So to me, I'm kind of, the energy stocks have had an incredible run since last fall. And so I'm not quite as optimistic during the short run, but I do like them over the next few years. And on the flip side of that, I do think there's, risk, not just towards these, these COVID beneficiaries, but if we do see an uptick in interest rates and inflation, growth generally could suffer relative to value. And that's probably a trade that has a long way to go. I think probably over the last few months it's just, begun to work and probably works over the next couple of years.
So yeah, let's talk about that energy trade a little bit because we haven't covered that on this show in a while. So I own a lot of just the general crude futures ETFs, right? That's how I have exposure. I'm long oil as well. Are you doing something like that where you're getting long basically the price of oil, or are you picking individual stocks out of the sector?
Yeah, I'm not super interested in the commodity itself. It's more the stocks. A lot of these stocks were trading at valuations. It reminds me of the gold mining stocks back in 2015. There were gold miners you could buy at literally 30, 40% of their liquidation value. If you just literally sold off all the gold mines, paid off all the debt, you'd triple your money. And that was an incredible opportunity in late 2015. To me, this last fall, we saw a lot, very similar setup in a lot of these oil and gas producers. And, to me, it's also relevant to pay attention to how the media's, treating them too. Back in 2015, the Wall Street Journal said gold was a pet rock. Gold's obviously, up 100% in 5 years. Since then, it was the same thing in oil. We saw, Jim Cramer came out last fall and said oil's uninvestable. You literally can't, buy any. There were articles in The Economist and Bloomberg Business Week saying, oil is dead. Back in 2008, everyone was talking about peak oil supply, like we were going to run out of oil. Over the last year, we've seen people talking about peak oil demand, that we've already reached peak oil demand, and I think that sentiment has gone way too far, and that extreme bearish sentiment was a terrific buy signal for energy. And I do think, there's a chance. I don't think a lot of people appreciate the risk of an energy crisis. Once the economy really gets going again, we could have oil shortages, and oil prices could go higher than most people imagine today.
Awesome. And I want to hop back to some of these COVID plays slash reopening potential bearish plays. But before we dig into it, I'm going to throw this one out to the chat. Let's bring ZingerNation into this thing. Let's crowdsource a little bit. If you guys still like some of these stocks like Peloton, what are some of the others? Zoom. So some of these COVID plays, throw the 1 in the chat. If you don't like them anymore, throw the 2. I'm with you, Jesse, that I think that, these things are a little bit overrun. I think that a lot of people who prefer to work out from home have already went ahead and bought that Peloton, and when all their gyms reopen, they're going to be back in there.
Luke, you're off.
Well, let's see what the crowd thinks. I just asked.
Peloton is not going back below like $100.
What's it at right now?
146. It was at 168. I mean, it's Peloton. Yes, it's a piece of gym equipment, but it's a network. It's I'm on there all the time talking to my friends in Texas. It's a network. Mm-hmm. I don't have a Peloton, but I would be if I had one.
Yeah, I was gonna say, is it working?
I don't have one, but that's what I hear people do.
All right. I mean, I did use the product once and I loved it, but I did it in a gym. Because I don't know, I like being out and about and that sort of thing. And I think the people who prefer to do it from home, like they've already gotten it. I mean, the stock is expensive. It's pricing in a lot of revenue growth. So that's why I don't like a lot of these names. So some of the things like a Zoom, that one I'd feel better about. But Jess, I'm curious, what are some of these other COVID stocks that you're worried about as we get to reopening, et cetera?
Well, it's to me, it's mostly, if if I'm looking to short, I'm mostly going to be using, indexes. I'm going to be using the major ETFs typically. And that's because I'm typically using, to hedge long exposure. And so I'll typically use QQQ or something like that. Small caps have had an incredible run. There might be, a retracement there. But to me, with these stocks like, Peloton, the sales growth, right? I mean, revenue growth has been 100% plus over the last 12 months. That decelerates, and it's trading at 15 times sales. If that decelerates to, 20-30% growth, where does the price to sales ratio have to go to reflect that? And to me, 10 times sales for almost any company is obscene. But for a hardware company like Peloton, obviously they have a software kind of revenue model too, which is why people love it. Yep. But 10 times sales is probably, too much in my view. Honestly, I think this stock could trade, 40, 50 times earnings, and 5-6 times sales. And that would, the stock would have to go down 60-70% to reflect that type of evaluation. The catalyst for that, like I said, would be a sharp deceleration in that revenue growth as a product of people going, starting to go back to the gym. And that trade is, like I said, something that, from the short side, I think it's extremely important to have very disciplined trading rules. I mean, to me, watching the GameStop thing was absolutely nuts. I've seen so many guys, fellow hedge fund managers and stuff, blow up their portfolios, with shorts that they allow to go way against them. I mean, it was nuts to be short GameStop in the first place with the short interest and all that stuff. I mean, I was long Bed Bath & Beyond for the past year for that, almost for the same thesis.
Wow.
Yeah. So I mean, shorting a stock
was a great move.
is crazy for the short interest, but same thing for stock with high momentum, like a Peloton, and that's why I say you kind of have to have be very disciplined about it. Take losses quickly. Kind of maybe put out a tester. See if it starts working, great. Then you can kind of maybe pyramid it. But if it's not working, you got to take losses quickly in these things.
Yeah, and that's like one of the rules of trading that I talk about on the show all the time, and I learned this the hard way. Is I just don't short stocks that are up 100%. Any stock that's doubled, tripled, quadrupled, I'm not doing it. Will I buy puts on it? Sure, I'll do it like that. But it took me getting blown out twice trying to hit stocks that I thought were too high, trying to get the timing right, and then you get another double in there.
Yeah, to me, I mean, I pay close attention to the momentum of the stock, and to me, I'd only start trying to short something like Tesla right now when momentum is really starting to drop off. To me, that paying attention to, a lot of people like to look at RSI as, overbought, oversold. I want to sell things that are overbought, buy things that are oversold. To me, that's absolutely backwards. When you have something that is a very strong, high RSI, high momentum, however you want to measure momentum, that's not something you want to short. I mean, to me, that's a sign that, the trend's probably going to continue in that direction for a time. And you want to look for that momentum to start waning before you get a potential reversal.
Yep. And Jesse, I got to ask you this one. We've gotten like 8 questions in the chat about it, but going back to oil, individual names that you like.
Well, I mean, I hesitate to mention them because I like I said, I was buying them in September. But one in particular that I noticed, so part of my discipline is looking at insider activity. And like I mentioned, it was John Doerr's buying that took me to AMRS. One stock that, I noticed, I guess last summer was Continental Resources. Harold Hamm is the CEO there. And he came in and he bought $150 million worth of stock plus.
And that's CLR, guys. Charlie
CLR.
Lima Romeo was the ticker there.
Yeah. And, he started buying up shares at $16 a share heavily. And to me, when I see that, one of the most successful guys in the oil patch, in the history of the oil patch, says his shares are ridiculously cheap and starts buying, CLR is one that that I started buying back in September, October, when it dipped down to about, $11, $12 a share. And it's up 100% since then. So it's hard for me to be as optimistic about it here. But I do think if the oil price does what I think it's going to do over the next couple of years, stocks like these are dramatically undervalued.
There we go. I like it. All right, Jesse, it was awesome having you on with us, hanging out for the power hour of the show. We promise people every day that we're bringing ideas. That's the point of the show. You certainly delivered on that. So it was awesome having you on. We got to bring you back.
Hey, good to talk to you guys. Thanks for having me.
Thanks for coming on. Appreciate it. All right, Luke. What's
All
next,
right.
Luke? What's next on the show?
What's next? So we've got two things we could do. I do have to hop out at 1:30. So I've got 7 minutes.
So do I.
All right, we're both hopping at 1:30. You'll be back with Spencer Israel. I believe Spencer has a new stock pick he's going to be bringing us today. We've delivered several, right? We talked naked brands at the top of the show. Now at high of the day. In Seago, I pitched. Prologis, that was one from Craig talking freight. So we've delivered on some ideas. So Jason, we could either do chat challenge or you were floating around a stock in the housing space. It's one that I don't agree with. We could get into that one too.
I was floating one in the housing space that you don't agree with.
Starts with an E, goes to an X.
That's not how. Yeah, that is housing. We could do that, or you wanna Diego, yeah, I'm a little sad today. He's right. Diego wants to know if I'm a little sad today. When I saw our Twitter names don't work, and they've been like that for like weeks, I'm thinking about what else is wrong that no one's seen. If we didn't have you guys in the community, we'd be out of business. So we appreciate you guys, and so I'm just sad about all these other things that we got to find. Maybe like 10 of you can volunteer to be.
And I'm sad because we always have more viewers on the stream than we do likes. And we know people rotate in and out every day. We want to be able to do this stuff all day.
Like Luke, Raquel.
But it has to make sense for us.
Raquel,
Yeah.
I love that name, Raquel. She noticed our Twitter link's not working yesterday, and other people did. No one told us till today, and it's like so aggravating. No, Brian, I'm happy we have community. If it wasn't for community, we'd be out of business because you guys are the ones finding this stuff. So yes, like you guys, like XII, I would do anything for that guy. If he sends me his, I have his address. We should send XII a present. Look, you know what I'm thinking, right?
Yep.
Somebody would do this. A store here today. You got Vivi at 2:30. I'm doing a terrible job teasing stuff. 2:30 is awesome, Vivi.
Wait. All right. Yeah, you're too sad. If Jason ever is too sad and brings you guys down, don't worry. I'll be here to rebound. I'm going to blow this way bigger. We have the biotech queen is coming at 2:30. If you guys like biotech stocks, if you like some of these stocks that are pre-drug, that they may have things in the pipeline. I mean, these are total rippers. She gave us two big winners this week. If you missed them, you better go rewind, watch her episodes. 2:30. She's coming on to talk biotech. She's going to give you new ideas. She's going to take tickers out of the chat. I mean, she's more of an expert on the space than anybody I've talked to.
All right, new rule.
New
rule for the show. New segment in the show. Amazing new segment. Okay. My brother Brian just sent me a text and said Spirit reports after the close today. So that is, we need, for any position that we have on, we need to have an update if they have earnings. The day of. Like we gotta update because what are we gonna do for earnings? So let's just make sure. I'm pulling up my Benzinga Pro to make sure Brian is not giving me fake news.
Yep.
Let's see.
And I'm going to share my screen. I'm going to show you guys what I do every single day.
Conference call scheduled tomorrow at 10 a.m. Benzinga Pro reports earnings confirmed at the close. So I own Spirit, guys. I own a decent amount on the position, the trade. Here we go. I own there it is. Okay, save. I bought it at $25. $23, $22, and it's at 32. It's a medium-sized position. It's at 32, 33. It's a medium-sized position. I'm not taking anything off. I don't care what they say. I'm not taking anything off. In fact, I don't know. Maybe I buy some options because I'm I'm mad I don't own any options. So maybe I buy some options. Let's just buy some options. Okay.
All right,
see
and
what
let
they
me do
look
this
at.
demo real quick too, guys. This has been Benzinga Pro. This is the real-time news and data platform that we're using every single day when we're looking at news. We're pulling up charts, we're looking at prices. We're running scans to see what's moving. Here is our earnings calendar in Benzinga Pro. Check this out. I go to watch lists. Look at this. I got this nice watch list. It's called Current Holdings. I click on that. I hit done. And now I have all the earnings dates, both confirmed and estimated for all the stocks that I own.
That's sweet.
Totally sweet. Yes. So
Can you-
I'm always, so when you guys hear me hyping up PayPal, you hear me hyping up forward into earnings, it's because I see them here. I'm deciding. I said, all right, I'm staying long in these things. Let's let them run. And we're 2 for 2 on the earnings play so far.
Can you get an email alert of like your earnings plays like that the day before or the day
Yes,
before?
you do. I
For
do
real?
get this email to me as well. Yes. Yes,
Are you
sir.
kidding me? Why don't I have that feature? I work here.
You don't.
Well, yeah, I resigned
out.
earlier. I'm
Yeah.
out. I'm out. After what's going on with this Twitter stuff, I'm out. Yeah. Do you think Spirit could hit $40? What's the 52-week high in Spirit? I want to try to buy some calls.
All right, let's use Benzinga Pro to figure this out. Give me the tickers SAVE. SAVE. Let's just look at this 1-year chart. So we got 2 things going for us. One, I can zoom in here.
Okay.
52-week range, $7 to $44. And here's the
44?
chart.
Okay. So I'm going to buy the 35s, I think. I'm going to pay up for it.
Let's go.
I'm not by the way,
Pro.benzinga.com, baby.
guys, when I look at probability trades, this is not a high probability trade. So BTN for me was a high probability trade, an upwork, and this one's not. This one is a binary trade. It's either not going to do anything or it's going to do something. I know that's what you think all the time, but I don't have any extra intelligence to say they're going to report a good quarter because I think the future is going to be much better, but I'm buying and I think that they're going to guide nicely. So I'm going to put a limit order in on the calls that are at strike price of $35. I'm putting a limit in of 470 is my order. The last one was 470. So let's see if I get executed. Executed. That's a bad word. It's like, that's bad stuff. Executed.
Get
But
filled,
anyways,
baby. Let's
get
fill
filled.
you up.
Okay. So I just did it. SNDL, high of day. SNDL is a high of day. Is anyone going to trim SNDL right now? Or are you holding the line? Do you have, what do they call it? Diamond hands?
You might have called this one perfectly, Jason. All right, let's pull up the chart. I'm going to the 1-day chart here. I'm throwing this up on my screen. There we go. All right. We said, 15 minutes ago, we said this thing is right at the high of the day. We said if it gets over that high, look at it, kept getting stopped. We said if it gets over the high, it's going to run. It ran. We said if it gets rejected, maybe close it out. Boom. We saw it break above, and it freaking ran. Let's go.
All right, Luke, I don't know. Luke,
Naked was a stock I talked at the top of the show.
Luke, stop talking about getting naked, okay? It's gross, man.
All right.
But Luke, seriously, the other
stop.
Thing, okay. What? Your microphone thing again? What the hell are you doing?
Producer Rohan turns me off.
He turns off other people too, just so you know, but not on the microphone.
Got it. Yep.
Got that one?
Got that one.
Spells my name wrong. Spells your name wrong.
All right, guys. We promise you guys that we are here to deliver trade ideas.
Wait,
we
Luke,
say we're gonna,
I thought you were doing something. I thought you were showing. I stopped talking for a second 'cause I thought you were showing. So SNDL, yeah. So Internet Explorer sold all his shares. I bought the June options for save. And then there was something else that. Oh yeah, this is. Maybe I didn't say it. Maybe I was just thinking it. Thiago told you to pull up Bill, BIL. They said check out Bill today.
BILL. Let's do it.
All right, guys.
That was a stock that I pitched about,
I
a month ago. Another 10% on BILL. Let's go.
Oh yeah, baby. All right.
BIL. The stock was at 130. It was probably what, Jason? 2 weeks, 3 weeks?
Yeah. I mean, it's been amazing.
192. Let's go.
Yeah.
3 weeks.
And I bought call options and I bought stock. All right, guys. Great show. Great day. Brian Schechter, come in town and build a compressor. We appreciate that. I'll send you the thing. And I'm speaking to a group of 14-year-olds about the investment club today. We're recruiting, we're hiring. If you want to do sales, you want to do marketing, you want to build, you don't have to be in our office. You can be in remote. As I said, I'm going to Mars. I need to get away from all this stuff. So I'm going to be remote. You're not going to see me in the office for a while. So, or I'm whatever. You guys heard the whole thing. Thank you, Spencer Israel. Hand it off. And it looks like there's a guest who's taking over too as the show host. So should we let them both on? Spencer, put him onto the stream. 2 years can stream audio only. All right. So, and then Luke, and you got Edwin, the other host. Edwin, I guess you're hosting.
Hi, Luke.
What's up, man?
I'm here too, guys.
Well, so you don't have Spencer. It's okay. Edwin's hosting right now, I guess.
Edwin's hosting. All right, Edwin, you got till 2:00, and then we're talking options.
Edwin is the guy that I emailed with. He's author of a short selling newsletter called The Bear Cave. His picks aren't as good as mine, but his picks are pretty good. He sent me his things. He had like a 12% gainer or 8% gainer. I'm more like the 100% gainers, Edwin. That's my, that's why I didn't acknowledge the return on your email because I'm 100%. If it's not a 100% gainer, I just don't trade it.
No worries, Jason. No worries.
How are you, man?
I'm great. Thanks for having me on. How are you?
Good. Luke, you can go. My meeting's at 1:45. I just found out. So Luke, you're already off before you talked. So what have you been in the markets for a while, man?
So Jason, I've been passionate about stocks from a really young age. Like second grade, I was all about stocks. And then freshman year of college is when I made the transition to the short side. I met with two big short sellers, Mark Cahotas and Jim Carruthers, who kind of pulled me into the short world. And since then, I've spent a lot of my time doing short bias research. And now I write a newsletter called The Bear Cave, which goes out to about 10,000 people on Wall Street about short ideas. That's
okay. I like that it goes to 10,000 people, but I don't like the second part of that. So you're a Wall Streeter. You're a suit.
I'm not a suit. Just the primary people who subscribe to the newsletter are people working at long, short hedge funds looking for ways to come up with short ideas. So what I do is, I'll close read SEC filings. I file lots of FOIA requests, and I generally try to find situations where companies either misleading investors or misleading customers.
But the only people that can get the newsletter are people on Wall Street. So guys, you can't go there because you're not on Wall Street. So that's what I was saying. You said you have the newsletter for people on Wall Street. So would you ever think of making a newsletter that people can get that like are not on Wall Street, like Main Street?
Jason, anyone can sign up for the newsletter. Tons of people from Main Street.
You just said 10,000 people from Wall Street.
I was using that just as a general way to describe it. The primary audience is for Wall Street analysts and hedge funds. Anyone can sign up. There's a free and paid version.
Oh, now that changes things. Okay, that's a change. All right, because like I thought you were saying it's exclusive for people on Wall Street, like that are in New York or hedge funds. So the reason I took a little exception to it because we built Benzinga to democratize Wall Street and give real-time news and information to people that weren't necessarily paying thousands of dollars or $25,000 a year for a Bloomberg. So that's why I was looking at that. So, but that's awesome. So you do that. You do FOIA requests. You do the research. You do all that kind of diligence and stuff.
I file tons of FOIA requests, and what makes me a little different is most of the big hedge funds will just file FOIA requests to the FTC or SEC. I mostly focus at the state level, so I send a lot of FOIA public record requests to state attorney generals, because then you can get consumer complaints against a company in their home state, and the data you get is often better. So you can get physical complaints, letters people have sent to their state attorney general, and you get a much better feel for whether or not a company is behaving properly. Versus when you do it at a federal level, like the FTC, you're just going to get an Excel sheet sent back to you a month later with just like the words of some complaints. It's not as great. And another thing you get at the state levels, oftentimes you can see if a state attorney general has forwarded the complaint to a company, and you get to see the company's response. Because sometimes companies just lie or repeatedly get in trouble, and that's a good sign that down the road they're going to have maybe regulatory scrutiny.
Yeah, totally. So what are some of the ones that you're looking at right now?
So one company that popped on my radar, I think it's kind of heavily shorted. It went public 6 months ago or 3 months ago or so, is Root Insurance. They're an insurtech company. How they work is you download their app. They track everything about your phone for the next 2 weeks after you download the app. And in theory, they can tell just by monitoring your phone whether or not you're a good driver. They can tell how fast you brake, how good you are at turning,
Yep.
what hours you drive, where you drive, do you use your phone when driving?
Yep.
And in theory, that data will allow them to price insurance better and give you better rates and only insure good drivers. In practice, it doesn't look like the model works as well as they claim it does. What it looks like is happening is they'll give you really low introductory rates for 3 or 6 months, and then they'll hike up the rate for no clear reason. And as a result, they churn through tons of people. But, if you advertise a lot and you're hiking the rates a lot, you can get like the illusion of like, okay, underwriting, especially in coronavirus times where fewer people are driving. So you're paying out a lot less. They get this kind of illusion of doing okay, when in reality, all they're doing is screwing people over with rate hikes during coronavirus and not paying out as much because people aren't driving as much. So I think that's one company I'm extremely skeptical of.
That's interesting. And they just went public though, right?
Yeah, they went public very recently. They are heavily shorted. Another competitor is Metromile. People kind of get the sense that they're not good underwriters. The thing that really caught my eye is regulators have been pressuring companies, auto insurance companies, to lower rates because no one's driving now. All these auto insurance companies are really profitable. So they've been pressuring every auto company is lowering rates by 10 or 20% and rebating it back to customers. Root kind of says they're doing that, but they're not. And the way they get away with it is they keep their base rates low, but they'll find nonsense reasons to raise rates on consumers. Like they'll say medical costs in your area have gone up, or the weather is getting worse in the area.
How did you find all this stuff out?
So again, this goes back to the doing public record requests. I sent a public record request to the Texas Attorney General and to the Texas Department of Insurance. And, I got tons of complaints back, and the people would write their attorney general saying, hey, my rate's going up 50% for no reason. I've never gotten in an accident. I'm not driving more. What's going on? And that's directly contradicting the narrative the company is telling investors, saying we're lowering rates or we're acting ethically, when they're not. In fact, like, it's so obscene that they specifically called out the state of Texas as an area where they were lowering rates and underwriting was getting better, even though the underwriting was only getting better because they were raising rates. So Root Insurance is definitely one that I'm extremely skeptical.
I like it. I like what you're saying. I like the diligence that you put into it. And the next question I guess I had is, do you look at a question that Austin asked, which I think is a great question? Do you look at the car accident data?
No, I'm not too familiar with that. I don't do too much in the auto sector.
Okay, he was asking, he was asking if you look at it, and because just look at other insurance plays, like if Tesla, you can drive way better with Tesla and there's less accidents. Are there other shorts playing that trend? I would think there are.
I'm sure there's a lot of people looking at the data.
Before my Tesla, Edwin.
Yeah.
My last car, I think, was a Chrysler 300, and I got in 3 accidents. I rear-ended 3 cars, like lightly. I'd be at a red light or green light, and I just like looking to the side at the person in the car. I just like bump them. I was like bump people. But with the Tesla, it warns you on everything you do. You can't even breathe. It warns you. So the number of accidents is going to go way down. It's like I was looking for stocks like oil stocks because, like oil change companies, because I haven't been to an oil change place since like 3 years ago. So I was looking for that kind of stuff. So you don't make shorts like that. Your shorts are more on heavy research of a company who lies a lot.
Exactly. I really like it, a company misleading investors or misleading consumers or fraud. It's not so much valuation. It's not an earnings play. It's really like something that's not making sense. And I should also add, I rarely will actually bet against companies with my own money. What I'll do is every 2 weeks, I'll put a write-up of my best idea, a company doing something shady, and send it out kind of so it's like the first stage of research for somebody who's looking for a short idea. They'll read what I write and say, that's interesting. I didn't know about that. Now I'm going to go do some more work on it. So that's really what I do.
So you're not actually like trading real money.
Sometimes I do. I do some long stuff on the microcap side, but I'm not too active shorting stuff. I usually try to avoid it so it doesn't seem like I have a conflict when I write on something.
I think you have a conflict if you don't do it, but I hear you. No, I'm serious.
Yeah.
Like there's yes, I get it. You're biased, but it's one thing for me to tell people to go buy BTN like I did a couple days ago, or to buy Upwork at $20 and was at 26, went down to 22, then 18, and I have to keep my conviction. If I just keep telling them to buy it versus my real money going to it. But I get your point. When you're shorting, it makes it even more so that you're trying to drive it down. And so this way, you put out the research, you're getting out the good quality information, and you're not biased by making the move. I get it. I think for the shorts, you got to be more careful on that. I think that's a smart move, man. Good job. I like it.
Exactly, Jason. And there's a real problem where a lot of these activist short sellers are just exaggerating things just to get a 1 or 2 day move, and they're destroying their credibility. So they need to exaggerate more next time.
Totally.
But if you don't have the financial incentive there, people will trust you more.
So there's an interesting company in the insurance space, not insurance. It's more like AI matching. Someone has put in the chat, Upstart. These SPACs go public up 10% today. I don't know. It's like, are you looking at any of these SPACs? When you go public as a SPAC, there's not as much research that goes into it. So are you doing anything on that front, man?
So I have been looking at a lot of SPACs. They're a fertile hunting ground. 2 SPACs really on my mind. I don't know too much about Upstart. 2 SPACs I've been following are Curiosity Stream and Triteris. Triteris is a very, very troubled one, in my opinion. They went public through a SPAC about 3 months ago. They have a roughly $1 billion market cap. I don't want to say, fraud. It just doesn't, none of the story adds up. They say they have a trade finance platform that's blockchain enabled, where supposedly players in the trade finance industry, like shipping coal from Australia to China, can borrow or lend money on this platform they have. But the platform's secret. You can't view it. It's very tough to see who the customers are on the platform. Everyone I've talked to who's tried to get on the platform gets told by the company, you need to sign a 1 or 2 year NDA. You can't see it yet. A lot of the revenue, and they disclose this, comes from related parties or indirectly from related parties. And almost any company you find, like that the sell side mentions or like that's on their website, is somehow connected to a related party. So very little here makes sense. The management team for this SPAC seems particularly weak. One of their executive vice presidents at Triteris is a guy named James Grow, who's been involved with like half a dozen penny stock pump and dumps. Their CEO, Srinivas Konaru, got a federal tax lien for $1 million like 3 years ago for not paying his taxes. His previous company was sold to a company that, like a penny stock, that performed poorly and ended up being charged by the SEC for fraud. So it's like all these weird actors and this platform you can't see, and related parties being all your customers. That makes me very nervous in terms of that SPAC.
Edwin, I have to hand it off to the person who's better looking, kinder, nicer, funnier, Spencer Israel. But I would love for you to come on again, because people are asking, what do you think a fair price target is for Root? And then the other SPAC that you mentioned, what was the other one you mentioned?
Triteris. And
no, the other one, Curiosity
Stream.
Yeah. So Spencer wants to know about Curiosity Stream. So he's gonna come on and talk about it. But I would love for you to come on more and give more details. And then you also said you like some micro cap and you go along those positions. We'd like to hear about some of those in a future show. Is that cool, man?
Absolutely, Jason.
And I'm glad you're not just for Wall Street, for Main Street too. It's not just Wall Street. So that is good. So it's sweet that people listen to you, and we want to hear more of your background and how you got into it. I know 2nd grade, but you went from 2nd grade to college. I don't know what happened between 3rd grade and all those other grades, unless you skipped all of them and you're some sort of genius, which you may be. Your name is Edwin. It makes you look smart, to be honest. Edwins are smart. Have you ever met a dumb Edwin? I've never met a dumb Edwin. If you met a dumb Edwin, press 1, because I've never met a dumb Edwin. So that's my take. All right. So I'm gonna let Spencer take over. I guess I have to add him in.
No, I'm right there. I'm always here.
Oh, he knows how to do it. Okay, good. All right, great guest. That's Edwin. Spencer, take over. I have to go do that call with Patrick. Sorry for my grouchy mood today, guys, but the Twitter name spelled wrong. I lost it. I can't take it anymore.
Can I just clarify on that? It was that the links expire eventually. So I'm going back now and I'm updating all the videos. So not to worry.
They expire eventually? Why?
I don't know. But I'm going through now and fixing all the links. So don't even worry about it. Sleep well tonight, Jason. The links are all fixed. All right.
Oh, wait, by the way, Edward Scissorhands. That's what they wrote.
Edward Scissorhands. Let's go.
I love ZingerNation, the community. They have such good stuff in there.
Wait, you just asked Edwin like 5 questions. Edwin, do you want to pick one and answer it?
Yeah. Okay. All right. You guys go. All right. Thank you. Love you guys.
All
Peace.
right. I don't know which of those questions you want to you want to get to, Edwin, but there was a lot. You just rattled off. Now you know what I deal with every day, right? It's just like question. No time for answer. Question. Let's start with this. What was that stock that we hadn't gotten to yet?
Curiosity Stream.
Yeah,
Spencer.
yeah. Let's go there. CURI.
Absolutely. So Curiosity Stream also went public through a SPAC recently, roughly $1 billion market cap. They're kind of seen as a streaming platform for educational documentaries. So one of their competitors might be a Netflix, but Curiosity Stream is solely focused on educational content. So documentaries, physics videos, that's kind of how they sell themselves. And they're really cheap. They're like $3 a month or $12 a year, roughly speaking. They have about 40 million a year in annual revenue, but they're growing really fast. And people are like, well, this could be the next Netflix or Hulu focused on the educational space. There's going to be a market for that. And, if they get to scale, they could be a really valuable company. And when I first looked at it, Spencer, I thought, this concept makes sense. It's growing really fast. Maybe there's something here. What really made me skeptical on this company was that when I logged onto the platform, just the content on there wasn't really as great as I was expecting. For example, they say that they have 919 original titles. My understanding is that they own this content. 919 documentaries is what you'd think from reading the SEC filings. And they say their content, based on an internal estimate, is worth about 1.3 billion. And that makes it seem like, they could be an acquisition target. Somebody might want to buy them for all this content. Right. But if you actually go on the website, their content is mostly like 2 or 3 minutes. The content they own and self-produce is 2 to 3 minute, really low quality videos that are is not better than anything you could find on YouTube. And yeah, there are a few like hour-long documentaries or 20-minute long like educational TV shows. But most of the content they own or produce is really low quality. That was the first thing that stuck out to me. So there isn't going to be a big reason they could be an acquisition target. Another thing that stuck out to me about Curiosity Stream is a lot of the content on there is available on YouTube, more so than I think most people would understand. So the first thing I did when I got on Curiosity Stream is I went to their finance section. And in their finance area, their entrepreneurship section, the videos they had were like David Rubenstein's famous one-on-one peer conversations where he interviewed.
Those are great,
but they're available on YouTube everywhere. Why would you want to pay for Curiosity Stream to give you the same results you could get on YouTube? And in fact, most of their content in their entrepreneurship section is stuff you could find on YouTube or other public sources on the web. And it's not like, their platform itself is super special or anything. It's just like a subpar Netflix. So it never really resonated with me. My personal opinion is this is a company that has an okay concept. They've advertised a ton. They aren't earning money, but because it's the pandemic and people are bored, they'll give it a shot. They'll sign up mainly for the annual plan for $12. And once the pandemic's over and once these annual plans start coming up for renewal, they'll just have massive churn. And I don't think they'll ever get to 100 million in revenue. I don't think they'll ever turn a profit, which is why they went public through a SPAC and have been promotional and have been selling a lot of stock. So I'm really skeptical.
Tell us how you really feel. Yeah, they just had an offering last week. They priced a 6.5 million share offering at $13.50. What that means is they're raising money, which is great if they need the money, and they're going to put it to use. But it also means for shareholders, you're being diluted. You own a smaller piece of the pie. It's not necessarily a bad thing, but it just means you're being diluted. So I from what you're saying here, it would seem to me that based on your research, at least, I don't know anything about this company, but the bull case is a takeover. That's if you're going along CRI, you're betting on a takeover. Is that what your research led you to believe?
I would say if you're going long, Curie, you're either betting on an acquisition, which I think is extremely unlikely, or you're
Yeah.
betting on 5 years of unprofitable growth, and then they're going to get to scale and they're going to become like one of these niche Netflix-like players. I think the second option is kind of possible, but unlikely. I think the first option is extremely, extremely unlikely. I do not see them getting acquired because, again, the content they own is really bad. There's not like some magic content here.
Maybe you can walk us through your process. So like let's pretend you had just come across CURI like today or yesterday. You said you dropped a bunch of nuggets in there. You said you look at the SEC filings. Walk us through your research process.
So that's a great question, Spencer. What really differentiates me is I would say like what I do in the first 30 minutes to an hour. The first thing I usually do is I'll just read a little about the company. I'll go to Edgar. And one thing I do that more individual investors should do is I go to see if there's SEC comment letters. Which you can find.
Wow, interesting. Okay.
Which you can find on Edgar. There's
can.
10Ks, there's 10Qs, there's 8Ks. There's also these things called comment letters, which is the SEC sending an informal letter to a company asking questions or applying more scrutiny, usually around the disclosure. So if a company has a lot of those, and you can see both the questions the SEC sends as well as the company responses. And if the SEC is asking tough questions and the company isn't giving good responses or just constantly saying they'll revise stuff, that's a really bad sign, in my opinion. I'll look at management history and just Google a little bit about management. Oftentimes you'll see like one or two of the executives has been associated with a lot of bad past companies. That's usually a negative sign. If I'm interested in a company, I'll file a FOIA request for some complaints on them. That's not that relevant for
what? You're in here filing FOIA requests? Oh my God. I've never heard of an investor filing FOIA. I mean, I've heard of it if you work at a hedge fund, but like for the average investor, I've never heard of anybody just filing FOIA requests. Those things can take years to get back to you.
So Spencer, it depends where you file them. If you file them at the federal...
Wait. Let's back up. FOIA stands for Freedom of Information Act, FOIA. Anybody can submit a request and request publicly available information. If you're a public company, if you're related to the federal government, state government, you have your federal funding. There's information that you can request. You have to pay. There's a filing fee you have to pay, and it can take a very long time. Sorry, back to your point though.
So Spencer, yeah, exactly. FOIA is a way any U.S. citizen can request public or semi-public information from the government. So some common things hedge funds usually do is they'll FOIA the SEC saying, hey, do you have any investigative documents on this company? That process can take a while, and the SEC will eventually get back to you on basically saying whether or not there's like an undisclosed investigation. You can go to the FTC and FOIA for consumer complaints that have been submitted to the FTC. That's going to take a while. People will send a lot of FOIA requests to the FDA to maybe try to get an angle on whether or not a drug's going to be approved. I mainly look at the state level. So what people do at the state level, I in particularly usually go to state attorney generals or like state departments of insurance. I found states are usually a lot faster, and many of them will waive the fees if it's under $50.
So I learned how to do that in college because I went to journalism school and I learned how to file FOIA requests. But how did you learn? This is not a skill that most people have. It's kind of a pain in the ass. So how did you learn? How did it even occur to you like, oh, I should file a FOIA request? Because that's not like the most obvious thing.
So Spencer, I think I was on Twitter. I think Twitter is a great way for people to learn. I was on Twitter and I was seeing some people talk about FOIA requests. Wow. And my first one was there's this company called care.com, no longer publicly traded. They're based in Massachusetts. And I saw they'd been investigated by the Massachusetts Attorney General. So I thought, I want these documents. So I sent a FOIA request for like complaints to the Massachusetts Attorney General that referenced this company called care.com. And to my amazement, like a month later, they just sent me a PDF with 150 pages of complaints on this company. And to me, I thought that was a real value add. So, I've been doing that more and more. But these are like some of the things I think give hedge funds an edge, but they're really available to anyone. So It probably doesn't make a lot of sense if you have 100 stocks and you're flipping them in and out. But if you're going to make long-term investments or going to be doing real research, I like it.
All right, I'm extremely impressed because again, I've never heard of any investor filing FOIA requests. Quite frankly, I think if you even look at the SEC filings and you go to the EDGAR database, you may be in the minority there. But how did you learn how to read those? Because those are also again gigantic pain in the ass, and they're very very long. And how did you learn how to read SEC filings and which filings are even to look at?
So Spencer, I would say I was really lucky. My two early mentors beginning of college were Jim Carruthers, who ran a hedge fund called Sophos. I think he's world class just as a person and as an investor. And then Mark Cahodes, who's this really vocal short seller.
He's don't tell me his Twitter handle because I've been a fan of his for years. It's crap. What is it? I don't remember. Is it Mark Cahodes? No, it's not that. Tell us his Twitter handle because I'm a big fan.
Everyone should go follow Mark Cahodes on Twitter at Alder Lane Eggs because he lives on a farm called Alder Lane Farm.
I've always thought it was a reference to Alderaan. Okay, all right, Alder Lane Eggs. Yeah, all right. Wow,
he's definitely a champion of the individuals. So he used to run a fund. It kind of blew up in controversy in 2008. But now all he does is he pursues long-term short activist campaigns, usually to try to bring down a company that he thinks is bad. So he'll be very vocal. He'll do periscopes, but he loves catering to individuals and like trying to get them involved in the short community. So Mark at Alder Lane Eggs. I think he's a gem of a person, and he's a great person to follow.
Yeah, I just put his Twitter handle up there. There was a typo on the first one, but yeah, Alder Lane. I always thought it was a reference to Star Wars, like Alderaan. I never bothered to read it closely. Wow. Okay, so we've got somebody who files FOIA requests. We've got somebody who knows how to read SEC filings, which is more than most people can say. I think. Damn, very impressed. Smash that like button for Edwin there. Do you have any short ideas on Clover? Just from the chat here.
Clover, I'm more mixed on. I haven't done the work there. I would say I'm skeptical, but I don't want to judge without doing the work for Clover.
Totally fair. And then I don't remember if you already said it, but which filings are your favorites? This is such a nerdy question to ask, but which filings are your favorites?
I think every individual, when they're looking at a company on EDGAR, should look at correspondence letters. And the way you find that is you type in CORRESP. CORRESP is kind of the thing you put in to find it. Those are great. Not all companies will have them. Not all companies will have them recently, but they're just letters and responses to and from the SEC on issues.
And the fact that you read the comment letters too, because like only people who really, really care submit comment letters, right? Like that's like super inside baseball stuff. So there's a trove of information there, but like I would expect that for a hedge fund. But again, I'm very impressed that you're just a regular. You're like us, but you look at you get FOIA requests and you look at SEC comment letters. It's real deep. When they say deep analysis, fundamental analysis, they're talking about this, right? This is real fundies, real fundamental research. So, fantastic stuff, Edwin. Thanks a lot. These Twitter handles up on the screen there. Thanks a lot, man. This has been great.
Absolutely. Happy to come on anytime. Yeah. And I'm really supportive of you guys standing up for the individual.
All right. Next time we will we'll talk more stocks and I'll pick your brain more about how you decipher these 1,000-page filings and FOIA requests. Because when you file a request, they can give you 10 pages or 1,000 pages. And so
we'll talk more.
Yeah, we can talk more about this. All right. Thanks a lot, man.
Thanks, Spencer.
All right.